Now, before you start judging, I swear I haven't lost it. But what I'm about to say will sound a little wild. There's a stock out there that quietly turned $10,000 into almost $43,000 in just 5 years. That is almost 200% up. And no, it's not NVIDIA. In fact, it's the complete opposite. The kind of stock that doesn't scream for attention, yet quietly builds fortunes. Let's break down how it happened and what it could mean for your wallet. In early 2020, this stock was trading around $100. Buying 10 stocks for $10,000 would have given you $43,000 in the beginning of 2025. But in 2020, this stock wasn't sexy. It didn't make headlines. But it had something better: stability and vision. Fast forward to today, 2025, and we're looking at a price of $295.88. That's a 187% return over 5 years, and even higher if you zoom out a full decade. Now, if you're looking at the year-to-date chart, you might be thinking, wait, it's down 26% just this year? Yikes! And that's exactly why this video matters, because short-term red doesn't always mean long-term failure. Stay tuned to figure out what stock is this. And don't forget to subscribe to follow for such exciting stock updates. Now let's get back to the stock. In the late 2021, this stock soared past the $400 mark, riding the wave of post-pandemic optimism and tech sector momentum. Then came the turbulence. 2022 and 2023 saw a noticeable decline, mirroring broader market trends as inflation, interest rate hikes, and global uncertainty shook investor confidence. But by late 2024, the stock staged a strong comeback, hitting all-time highs of $436, regaining much of the ground it had lost and restoring long-term investor optimism. Most recently, in mid-2025, it faced a modest correction. Nothing catastrophic, but a healthy pullback following the previous rally. Yes, I think you guessed it right, it is Tesla. This stock is a drama queen, loud in the short term, wise in the long run. Despite its recent dip, this stock has outpaced inflation, crushed savings accounts, and left most passive investors wishing they had paid attention earlier. So here's the million-dollar question. What made this stock a silent powerhouse over the past decade? Let's break it down. First is the explosive revenue growth. This company wasn't selling dreams, it was selling real products to real customers and raking in real profits. Secondly, we have smart reinvestment. While others were handing out dividends for applause, this company was busy pouring its earnings back into innovation, building better tech, expanding reach, and playing the long game. This company didn't just build a good product, it positioned itself in an industry that the world is increasingly dependent on. We're talking about sectors like semiconductors, cloud computing, AI infrastructure, or enterprise software, the backbone of everything from smartphones to self-driving cars and trucks to global logistics. Let's talk about that 26.73% drop this year. On the surface, that's painful. But dig deeper, and it looks more like a healthy market reset than a meltdown. Remember early 2023? Big drop. Then boom, 2024 came back swinging. This stock is showing a pattern. Short-term dips followed by long-term gains. And seasoned investors? They know dips don't mean disaster. They mean discount. I'm not a financial advisor, so don't just take my word for it. Use your own brain before making money moves. Let's get practical. $1,000 invested in July 2025 post-pandemic at rate of $100. You would have received 10 stocks. Today, at the rate of $330, you would have made $3,300. That is 230% return. If invested $10,000, you'd be close to $33,000. And if you added during downturns, even higher. This isn't a guess the next meme coin scenario. This is plain, boring, effective investing. The kind that doesn't look cool on Instagram but builds real wealth over time. This stock didn't make millionaires overnight, but it rewarded patience, discipline, and logic. It dropped this year. It soared the 5 before it. Over 10 years, it made investors quietly rich. You don't need to be first, you just need to stay long enough to win. At the end of the day, you're the driver of your financial journey. You don't need to time the market perfectly, you just need to stop jumping lanes and stay on the road long enough to reach your destination. If you found this stock overview helpful, don't forget to subscribe, give it a like, and let me know in the comments what topic you'd like me to cover next.